All right, back to work, back from the dead, right? Boy, thank you so much for putting up with me here, guys, over the past couple days here, almost a week here, been battling this head cold. But it's time to get back to work, though. I'm feeling good here this afternoon. My voice is back, and we're back in the action here tonight on this video newsletter. As always, in case you forgot my name, it's been so long since I've seen you guys. My name is Joseph. If you're tuning in for the first time tonight, great to have you with me. My job tonight is to help us find the best trades, setting up for Friday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background, as you can see. Oh, we got the oil. Nasdaq's here. S&P's here. Glad to see you are here right along with us. Sorry to keep you waiting tonight. Busy day in the markets today. I'm sure you can relate to that as well, but that's all right. We get some money to make on Friday, and I got a bunch of great trades on my radar. I'm going to break down all my favorite setups so you can make your money to finish up the week on Friday morning. And you know me, I'm going to make sure I give you some tips to stay out of trouble tomorrow, avoid some traps, because you look at these charts tonight, you can see there's probably a lot of traps here with that big jawboning back and forth. I'm going to break it all down tonight in this video, so make sure you watch the entire thing. Speaking of the video though tonight, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas. I don't want you to miss not tomorrow night's video, but next week's video newsletter. So make sure you subscribe, hit that bell icon. A lot of this stuff is very time sensitive, so hit that bell. That way you always get notified every time we publish something new. If you got any questions tonight, drop those questions in the comment section below. And if you guys enjoy this video as much as I enjoy making it, I enjoy it a whole lot more tonight. Now my voice is back, that's for sure. Hit that like button. Thank you so much for supporting me the last couple days here and supporting this YouTube channel. But enough of the intro though, Joe. Where is the money? Where's the easy money on Friday? Let's get the game plan put together. I mean, where do we start? Where do we start? We have a ton of drama happening between Russia and not just Russia and Ukraine, the whole world and Ukraine right now. That, of course, is going to give us some kind of impetus for tomorrow, right? Some possible catalysts for tomorrow. We get some big news tomorrow. Believe it or not, there actually is some scheduled news tomorrow that is a really important news report tomorrow. I want to make sure you guys know where that is. You can trade that news or trade the reaction to it. And boy, oh boy, you can see there is a lot of big moves on these charts here today. Big move up for the S&P bulls. Big move up for the Nasdaq bulls. Big move down, right? Who saw that coming here? That big drop off the high on the crude oil. I'll tell you, anytime we see big moves in one direction like this, there are three key scenarios that you want to be prepared for tomorrow, right? If you master these three scenarios after big moves like this, you'll be printing money off this computer like a darn ATM machine. So got a lot we're going to cover tonight. We're going to cover those three scenarios. Obviously, some buy setups. Clearly going to be some sell setups. And don't be surprised if we see some reversals tomorrow. So we'll talk a lot about that stuff here tonight on this video. Now, speaking of tomorrow, let's make sure we don't forget. Let's make sure we're on the same page. Tomorrow is a Friday. And of course, what we talked about earlier, there were two really big news reports this week. One was the PMI number on Tuesday, and the second one is this one coming tomorrow, that personal income number. Remember, inflation has been insane, right? Insane inflation lately. The Fed has told us time and time again, this is one of their core inflation reports, which means if the Fed's watching, we want to be watching as well. The markets are pretty much obsessed with the Fed bank right now. So that is definitely going to be hopefully a nice catalyst for us tomorrow. And then obviously, it goes without saying, the big kind of known unknown right now is, earlier on this week, the known unknown is, will Russia invade Ukraine? Now that is a known known. Now we know they invaded Ukraine. Now we're looking to see how far does this go, right? Does this settle down? Do people kind of get back to, the norm? Does this kind of get normalized a little bit? Or do we keep seeing this become escalated? Does this start to flare up again tomorrow? And lead to some more, big moves here. So that is a big cloud hanging over tomorrow's trading session. So unfortunately, I can't really prepare. I mean, I can prepare for it, right? We're going to prepare for those 3 scenarios I talked about earlier, but you're going to be aware that's definitely something we will be watching tomorrow morning in our trade room very closely. Any new kind of updates, any developments coming out of Ukraine and the Russia situation. So keep that on your radar tomorrow. Also, don't forget, Fridays are oftentimes a smaller window of opportunity. So, if you're going into lunch tomorrow, things are starting to slow down. Remember, trading is a lot like riding a bicycle. It's so much easier when the markets are moving. So if things are slow at some point, probably 11:45, 12 o'clock, going into lunchtime tomorrow, remember, those Fridays tend to be a little bit slower than other days of the week. But, tomorrow should be a pretty darn good day in the trade room. Should be a pretty darn good day if you master these 3 situations we're talking about here tonight. So, S&P, Nasdaq, crude oil. Why don't we grab a look at the E-mini, the S&P 500 futures contract here. Most important factor right now is the size of this move, right? A huge move to finish off the trading day. That's the most important thing. That's really all that matters right now. Yeah, the bulls have control. Yeah, we've made a measured move. Yes, we are back up into this range, and of course ranges act like magnets, but the most important thing affecting this market right now is the sheer, well, again, I go back and say the most important affecting these markets right now is this drama happening in Ukraine. But as far as a trading situation right now, the size of this move tells me to expect really one of 3, or possibly really all 3 of these scenarios at some point tomorrow. What you want to think about is as buyers come back in after a big move like this, they're going to look at this chart and say, wait a second, this is a little bit too high to buy. And when things are too high to buy, now what do I mean by that? Well, you'll notice there wasn't really a lot of options here unless you're buying high, right, on the way going higher. At this point, with such a big move in one direction, we have to think, what is it going to take to really incentivize buyers right now? A deep pullback. So one of the scenarios you want to be ready for tomorrow is going to be a deep pullback. Now, it's not far-fetched to think, it's not crazy to think that with all this big bear move down the last couple days, this deep pullback could turn into a reversal. And so that is the second scenario that we want to prepare for. Very difficult to predict that reversal right now just because we're so bullish, but it's definitely the second scenario that I want to be ready for. We're going to talk about all this stuff in more detail here in a moment. The third scenario, let's say that buyers don't take profit, right? Let's say that nobody gets out and nobody dares to sell it because it's so darn bullish. This is where the third scenario comes in, and that is a trading range. Range-bound market, that would be one of the easiest types of situations to trade tomorrow. I know it doesn't seem very easy, but you'll see why I say that in a moment. So deep pullback, right? Deep pullback to attract more bulls in. Now, deep pullbacks have a bunch of different ways to trade them. Okay, we'll talk about those as we go. Range, okay, sideways range, or deep pullback turns into a reversal. Let's break it down. Let's talk about how to do it, and we'll talk about a couple different setups on the S&P, couple different setups on the Nasdaq, couple different setups on the oil. So make sure you watch the entire thing to really get all of the different ways to trade and capitalize on this stuff tomorrow. Now, let's talk about deep pullbacks. Okay, I've got an idea of kind of where I'd like to get that deep pullback down into, but in all reality, a lot of trading is just waiting to see what you get. So there are 2 very common types of deep pullbacks. One is a 2-legged pullback. 2-legged pullbacks are pretty easy because they'll bounce off the moving average and the market will roll lower. When you get those 2-legged pullbacks, what you want to do is you want to draw that trend line over the top and then try to get it on the other side. The objective at that point is to retest that high. You can see an example of a two-legged pullback here, right? We roll up, we pull back, we go lower, we draw that trend line over, and you're simply trying to get above that trend line and get into it, right? It's, again, a two-legged pullback because it has two legs to it. That's going to be one of two ways we'll talk about here on the S&P. What is more common for a deep pullback is to get what we call a two-try failure. These are my favorites because what we want to do is get that nice deep pullback. Again, I've got my eyes on this area between 38.5 and 24, but in all reality, it's just got to give us a little bit of a relatively deep pullback here to attract more buyers into this market. When this happens now, what you want to do is, when you get those deep pullbacks like this, is you want to look for two entries on this. One is going to be a two-try failure. Let the bears try twice off the moving average, right? And the reason why we like to use it twice is because, remember, at this point now, a deep pullback will get all the inexperienced traders thinking we're going right back down again. Let them dig that grave, right? Let them dig that hole for themselves. And then once they jump into it, we know exactly where their stops are, and we can hit them right where it hurts. Now, that's one way to trade that deep pullback. We call these two-try failures. The second way to do it is as we go higher, we oftentimes now will see a new channel form off that high, off that low, and what you want on this entry is you want the trap entry. Okay, the trap entry, that's the trade you want on the follow-up. Okay, it'll be a two-legged, again, a two-try pullback, not two-legged pullback, like I said before, a two-try failure, into a trap entry off of that low. Now, I'm talking a lot about the entries right now. I know that most of you guys and gals have taken the free trading course, the quick start class. You've learned all the setups. You know the rules, so you're ready to go for tomorrow. If you haven't taken the quick start course yet, definitely take that class, learn the setups, learn the rules, learn when to take them, when to skip them. I'll put a little link up there for you in the upper right-hand corner. That will take you to the website, and you can register for the course there. It's free, right? It's great. You'll see a lot of examples of how we apply it. If you're serious about your trading and you want a good roadmap to follow as you're trading on your own out there each day, that free quick start class will bring you right up to speed with how we trade together every day in our trade room. So those are, again, two ways to trade that deep pullback to try failure into that trap, right? So a couple different ways to trade that pullback here. I'm going to talk a few more of these on the Nasdaq, right? So make sure you keep on watching here. Now, by now, you're probably wondering, okay, Joe, at some point, this deep pullback becomes a failure, right? Do we just keep on waiting for it and then buy it up? No. Here's an easy giveaway when a deep pullback becomes a reversal. Here are two easy giveaways for a reversal. One, let's say we pull back into the base of that channel, into the buy zone down there. Let's say these sellers now, they come in, they try once, they run, and they really jump off that moving average. That's what I call a 1, 2, 3 reversal pattern, right? 1, strong move down. 2, pull back to the moving average. 3 is a strong jump off of the moving average. Once we see that 1, 2, 3 reversal, now we find a new trend line off of those lows. Okay? Mark a new channel off that high. And then my favorite entries are always going to be traps off the high. Traps often equal into failure patterns, which you'll learn inside that free class I mentioned. Failure, right? Failure patterns into pullback patterns. These are very common kind of combinations. Trap, failure, pullback. And again, I'm just kind of scribbling on this stuff right now. You'll see real examples of these inside that free class I mentioned earlier, right? So trap, failure, pullback combo. Now, where would the target be on this, right? Where's the target for this? It's easy. The size of this leg is almost always the size of this leg. It's just it's amazing how charts work. That self-fulfilling prophecy with it, right? So oftentimes this middle leg will be very large. Okay, so don't be surprised if it's really large as it drops, right? And it's just the way it goes. The size of this leg, size of that leg, that's going to give you a real fine-tuned kind of target as we go lower here. And then keep in mind, there's that overnight range down there, right? 41.30. That's a pretty obvious magnet here for those bears. So bears would love to get back down to that range here from earlier on this morning, which seems like yesterday at this point, right? Doesn't it? All right. So that covers the deep pullback here on the S&P. What if the mark keeps on going higher? What if we keep on going higher here? What would happen then? Nothing really. At that point, you don't want to get roped into buying it as it goes higher here. You want to keep patient for two-legged pullback, grab the up and over, keep patient for deep pullback, to try failure into that trap it, right? You want to keep waiting for that. Where do we think this market might want to be going if it goes higher here? I would imagine Friday's close is a really, really likely scenario for tomorrow. If we go higher here, you'll notice here in a moment, the Nasdaq is almost there right now. Crude oil almost there right now. It is remarkably common how many times we see a market close last Friday, go crazy the following week, up and down and everywhere, and then finish up the next week right where Friday's close was. So I always kind of keep it on my radar as we go into Wednesday, Thursday, Friday trading session. There's also a big top up here if things really get out of control for the buyers there. That does seem unlikely, consider the situation, but who knows, right? This big bounce seemed pretty unlikely too. So, we're not in a we're not in the prediction business. We're in the reaction business. So now we know how to trade this reversal here. Now, I have a couple more reversals for you, and I want to cover the range. All right, so let's go to the Nasdaq, because the Nasdaq is almost the same. So rather than repeat myself over and over again tonight, we'll just cover the Nasdaq now. Okay, so again, what I talk about right now on the Nasdaq, you can pretty much apply right directly to the S&P. All right, so just keep that in mind. And if I miss anything tonight, obviously I'll fill in any of the missing details in the trade room. All right, looking good. Over on the Nasdaq right now, what's the most important thing? We're definitely bullish. That's for sure. And it's a huge move, right? It's a huge move. And you'll notice we're only a few pennies away from last Friday's close. Why is a huge move so important? Because again, experienced traders are going to come in here, they're going to look at this chart and go, I'm not buying way up here, right? Give me a reason to buy. Give me a nice deep pullback. Right? Give me something to buy. So we've talked about those two types of pullbacks on the S&P already. That is pretty much the same strategy here on the Nasdaq. Okay? We know that if this market was to pull back and jump off the moving average, right? We know that is going to be a reversal. And so we talk about that game plan, and we know that it's pretty much the same thing on the Nasdaq. So we'll make it easy and just, again, copy and paste the idea over the Nasdaq. Now, one more type of reversal. Okay, one more type of reversal. Okay, we talked about the 1, 2, 3 reversal, which is pretty darn common, right? It is pretty darn common. You can see an example back here, right? We make that move lower. We get that 1, 2, 3 reversal. What do? You mark up that high, you mark up that low, and you buy the pullback, right? It's just if you've been watching my videos here on YouTube, you know this is one of the most common setups that we see in our trade room. So now, how do we sell? What else? What other type of reversal might we get here? We definitely may see the break and grind, right? Or the grinder. I would say this is quite likely tomorrow. It may not be the most common overall, but consider the situation we're in right now. Now, let's say now that we get that deep pullback. But now, instead of the price coming back and jumping off the moving average, now it kind of starts to sink, right? And sink and sink. You know what I mean? It kind of grinds down. Why would it grind down? These are all the buyers getting out. At this point, if the buyers get spooked, Yeah, again, think this. There's so many different situations that could happen overnight right now in this whole Ukrainian, drama that we could easily spook these buyers. This has to be one of the most fragile bull markets we've seen all year, right? I mean, come on, let's be realistic. So the reality is, if the buyers walk away and sellers don't short it, then the market can just keep on dropping like that, and you'll notice it kind of grind down. When it grinds, that's usually a sign, that kind of melt down, that kind of melting lower. It's usually a sign there's some sort of short squeeze, or in this case, a long squeeze, if it is such a thing. So what you do is you want to really draw a tight channel off of that low, and then here's the secret. The secret is find that big top up there. Right? Find that hidden channel, right? It's going to look weird at first. It'll look weird at first because you're like, well, what the hell am I using that top for, right? But what you want to do is now start thinking about where my swings are. And you want to look for, again, my favorite entry is to find a swing, grab a trap. Traps oftentimes turn into pullback failures. Pullback failures oftentimes turn into, in this case, bearish pullbacks and the run lower, right? So same idea here. The hardest part about these grinders is you don't want to let it kind of talk you into chasing it, right? What'll happen sometimes is you'll short one of these things. The first time you do it, you'll make some money on it, and you'll think that, oh, every time this happens, it'll work. But then eventually what happens is you get that pop, that grind down, and then all of a sudden you jump in here, and then, you know what happens? That's the minute it pulls back on you, right? And you get that, you get bounced out of your short, right? You're selling way down here. Professionals are waiting to sell high, right? Sell high, buy low. That's the old rule, right? So again, trap, failure, and then of course, pullback combination. Where are the most consistent targets on this? The size of that first leg, right? Size of that leg. Okay, now obviously, I'm kind of simplifying this right now. It'll probably be a little bit larger, I would imagine, right? It'll really sort of grind down overnight, draw that low, draw it nice and tight, find those traps, right? And then grab our entries off of that. First leg, last leg, or third leg, right? That is oftentimes your best target. Now, clearly in this situation, leaving a runner would be great back down into that range at 13,150. That's definitely something you're going to want to keep on your radar, kind of keep in your toolbox for tomorrow. All right? Now, let's talk about ranges, okay? Because you got to be ready for the range on this, because the range, if there's one thing that's probably most likely, whenever I see a big move in one day, I'm always thinking tomorrow's going to be a range, right? So, if we go sideways, let's get rid of this channel here. Oh, and by the way, where do we think this market wants to go if it goes higher? If it goes higher, you'll notice there's that range up there. You've got the 157 top, 14,250, that range up there. It does seem a little bit unlikely that it keeps on grinding like that or has another big leg higher, but hey, I mean, anything's possible, right? We get a bunch more ranges up there. So, 14,300, 14,250 seems to be a pretty logical area if this market keeps on grinding higher here overnight. All right, let's talk range. If you know me, you know I love a range, right? Ranges are pretty easy to trade as long as you know how to trade them. So this range right now, I don't really know exactly where the range will be. Maybe it's like that. I don't know. We'll have to wait and see where the range develops here. What you want to remember is there are two really important ways to trade ranges. Okay, first of all, again, let me kind of zoom in on this for you. Once we see that trading range, what you want to do is you want to take the size of that range, and the size of that range will tell you where your best support zone is. All right, now I go into a lot more detail of this technique inside that free class I mentioned earlier. So if I haven't convinced you yet, definitely hit that button up there and grab that free course and learn this technique. This is a pretty cool technique. So the size of the range creates support levels below the range. Okay? So once we have the range, we'll kind of know. Now, We've also got swing here, swing here. I've got my eyes on this area for that deep pullback. But be aware though, be aware, if we go into a range, that range becomes a magnet. And so a deep pullback is a lot less likely, not impossible. Like I said, we might get kind of both of these. We may see a range tomorrow and a really deep pullback. So be aware of that, right? That's a very easy possible to see here. But most of the time, when a market goes sideways in a range, it doesn't really matter how big that move is. It will just kind of use that range itself. Once you find a range, everything builds off of that trading range. You can almost ignore the rest of the chart. I know it seems crazy, that one little thing, but I'm telling you right now, when you learn to use these ranges, I see this day in and day out. Okay, here's where we want to trade it. What we want to do is you want to find those levels of support, wait for a pullback to that support, and trap in those bears. When the market starts going sideways, now wait for, we call these failure patterns, by the way. You'll learn more about this in that free course, right? Wait for the price to pull back into an area of support. Got to be a level of support. Then look for the bears coming in and wait for them to commit off the moving average. Once they come in and try to sell short on this, now you know right where their stops are, right? You know exactly where their pain points are, and that's where you want to hit them, okay? Trap in those bears using a failure pattern and hit them right, basically right where their exits are. Very bull market, range above us. Now, you're not done at that point. The next step you want to do is you want to look for, let's put that right there. You want to look for the next move higher is this next pullback. Okay, we call this trade the turn or trade the rotation. Right? See what I'm doing here? I'm marking up those two highs right there. I find that new low. And now, obviously I'm just drawing on this right now, but this could be a trap entry. This could be a failure entry into a pullback combination. Again, you're going to see good examples of that inside that free trading class I mentioned earlier, but that's what you're looking for off the low of that new channel. All right? Now, where are our targets? Okay? So again, the failure pattern, right? The failure, and then whichever one of the entry patterns we get off low of that channel. Okay? Where's my follow-up? Where my target's at? You got to take some cash off at the top of the range. Okay, that's always kind of the king or queen of the targets. Okay, that's going to be the most important target. And then the final target goes at the pendulum swing, right? The pendulum swing, obviously I don't know exactly where it is right now, but you take the size of the move below, put that above, and that creates the final target there. Okay? So again, there are plenty of ways to make money if it goes sideways. And again, you would think this is quite likely, right? With just a big move tomorrow. All right, so we got that covered. Now, one thing I would keep in mind is that could we combine a range with a two-legged pullback? Absolutely, right? Could we combine a range with a really deep pullback? Oh, hell yeah, right? So you can blend these together, right? To try failure into that, right? Between you and me, this is where the good money is right here, right? You see a range up top, that's your magnet, big pullback, traps in all those bears, use their stops as fuel, and then grab that trap or failure on the way back up. So that's the game plan as we go higher. Next up here, one very common question is how do we know when it's a breakout? So we make our move lower, we get that failure, right? That channel, and we go blasting higher. Once we get through the pendulum swing, then we know we have the breakout. Now, where do we think the market wants to go at that point? Remember, the breakout leg is the measuring leg. So as we come over, if we break out and go higher now we have a trending market. We find our new channel, right? We drill down, find our entries. We'll cover more of that, obviously, in the video classes and the trade room. But that's the follow-up. Where's the target off of that? Remember, the size of the breakout leg is the size of the measuring leg. Okay, that'll keep you on the right track as you're going higher. All right, guys, let's keep going. Let's keep going. We come to the NASDAQ here pretty good. And again, everything we talked about tonight on the NASDAQ can pretty much be applied to the S&P as well. Let's grab some oil. Over on the oil, right, the market that probably surprised most of the people today, right, is this drop on the oil. And boy, you can see right away buyers are gobbling up this open right now as we go. What's the most important factor right now on the oil? It doesn't look like a very big move, but this is a huge move. This is a very slow time frame for oil. I usually use a 2,000 tick chart on oil. This is a 6,000 tick chart. Look at this, right? This is from what? 154 all the way down to 91.50. That is, if my math is correct, a $9 move, right? That is literally 4 times the size of a normal trading range. So we certainly know this is a very, very big move. It just happens to be a very distracting V-top, right? Or big up and big down again. So how do we trade something like this? Well, again, the same principles apply. Everything we've talked about on the S&P and the NASDAQ also apply here on the oil. At this point now, there's evidence we're seeing that deep pullback, right? We may end up coming back down to retest that low and go into a trading range. So keep an eye out for that trading range. Let's think about this. You know, we've already talked about this now. We already know kind of the game plan on this. I've got my channel drawn a little bit wider tonight on the oil just because I'm anticipating a deeper pullback, just like we have on the S&P and the NASDAQ. And by the way, I think one of the most important things about oil right now is trade the darn chart. Don't trade the news. Don't trade the headlines. Don't trade what you think. Trade what you see. I think this is a market that could easily fool some people tomorrow in whatever direction it wants to go. I'm not going to sit here and make predictions because anyone making predictions right now is a fool because we have so much uncertainty out there. And really, all we got to do every day is wake up and trade the darn chart. That's all we do. You know, we don't make predictions and hope it comes true. You know, I'm sure some people do, but they don't last very long. The folks that last long, like we have at School of Trade, we don't predict. We just trade what we see. So try not to let the fact that there's, trying to let the headlines right now blur what's really going on. All right. I had to kind of refocus myself as well this afternoon. I'm sure you're dealing with the same thing right now. All right. So yes, lots of uncertainty here. Big move down for the bears. Very big move down. Right. We want to get that deep pullback. We want to see if we can get those buyers wrapped in, right? Get them once, get them twice, take it lower, and grab that trap re-entry, right? This is nothing different here, right? Nothing different. It's a different direction, but it's the same idea, right? Big bear move down. Do we get that deep pullback? With the buyers once, buyers twice, rope in those buyers, sell into those stops, find that new channel, grab that trap, and hit it again before we go back to those lows. Same idea. Again, just different directions. Or does this end up running up, holding the pullback, and jumping? That's called a 1, 2, 3 reversal. We mark up that high, we mark up that low, and you're more than welcome to try to buy that pullback yourself. You're more than welcome to. It's not my style. It's quite a risky trade. Not a very reliable trade, not a very consistent trade. You take 100 of those trades, you're going to lose money, right? That's all that really matters. It's not about, do I get lucky on one trade? We don't trade one trade. We take hundreds of trades, right? So it's all about making sure the trades we take are a very high percentage. Not a very high percentage trade right there. Why? Because of all that momentum. Anytime we see a ton of momentum in one direction, there is a magnet that wants to bring it right back down to retest that low. Now, again, a lot of uncertainty. That might not happen this time. A lot of uncertainty right now. There's a whole mess going on out there right now, and it could definitely impact this market tomorrow. So be aware of that. If they do hold this 1, 2, 3 reversal, what do? We drill down to our faster time frame. We find our traps, our failures, our pullback combos. Remember, in this case, it's pretty obvious. I would leave a target back at 100. That seems like a pretty easy number to use as a target. But generally speaking, though, this leg is equal to that leg. That's a very common way to do it. or not a very common way, but a very reliable way to do it. Okay, I see consistently that target working every day in the trade room, right? So that's the way we want to trade it. Or do we pop up and grind? Same thing. Go to the channel, find that big old channel. And then the hardest part about this one is again, don't get roped into chasing it as it goes higher. Wait for that pullback. Try to get underneath the moving average. That will get you underneath some prior swings. There's your trap. There is your failure and your pullback combination. Trap, failure, pullback combo. Size of that leg. And again, $100 a barrel. Probably gonna be pretty high odds there, right, for that objective going higher here. Those are scenarios you want to think about right now. I think it would be, again, very smart of you though, very wise of you, if we do get that up 1, 2, and back down again, think about a range down here, right? Think about there being a range here. What do you do with that range? What do? You use size of the range to find levels of resistance. Okay, in this case, there'll be a trend line coming down too, so you get that to work for too. We wait for the pop-up, wait for the buyers to come in and foolishly buy that pullback. They still do it nonstop. It's amazing people still do that. And of course, that buyer failure, find that new channel and hit it for the pendulum swing, right? The pendulum swing. Again, once you see a range on the chart, everything builds off of that trading range. It's easy to see though that Friday's close would be an easy magnet. $90 a barrel is an easy magnet. And there's this big, really big range down here around 89. Really when you think about it, right? If you look at a chart, like a 4-hour chart right now, there's this huge range down here, right? It's all stacked up right in this area. Anytime you see a lot of overlapping candles like that, that's where the market's going to kind of gravitate towards, right? So that's going to be kind of the objective here. Right now, I would say 90, that Friday close is very reasonable here. So we'll see how the market reacts after it goes back to retest lows. If it goes back to retest those lows, you'll know exactly kind of what to look for as it goes. Now, let's say we do get that pop up, that 1, that 2, we roll lower and we blast, right? And we just crush it going lower now. At that point now, think about using these prior swings in combination with channels coming down to sell that breakout pullback. Makes sense, right? Try to use those prior lows now for key areas of resistance in this case. And what will usually happen is on these scenarios, this will be that low, right? Kind of that low zone, if you will. What happens a lot of times in these scenarios is the market will, of course, run through. It'll pull. Let me go through a little bit further here, right? Run through. It'll pull, right? Pull back, and you want to get above that moving average. Use this area as resistance. Combine it in with those hidden channels and grab those failures, traps, and pullbacks off of it. Remember, leg 1, leg 3. Okay, keep that in mind as we go lower. All right, guys. Now I'm sure there'll be something I missed tonight. Unfortunately, I can't cover every possible scenario. This video will be 3 hours long. But tomorrow morning, though, every morning in the trade room, we will definitely make sure we're ready for whatever scenario comes our way here. I'm pretty excited about tomorrow. Hope you are as well. Don't forget, we get together every morning in the trade room, 8 o'clock Eastern time. I would love to have you with me. I'll put all the membership links right below me tonight in the description of this video. Don't be afraid to drop a comment in the comment section below. Use that toll-free phone number. Use our live chat if you got any questions there. And again, make sure you subscribe to our channel. We've got more coming, more good stuff coming for you next week to make sure we make some money as we go into the new month of March. Guys and gals, thank you so much for tuning in. Thanks for sticking around tonight. I'm a little bit late here to the video, as you guys know, and I appreciate all the support over the last couple of days. and all the patience of tolerating this kind of sinus cold I managed to pick up somehow along the way. That's all right, though. I'm back, baby. I'm back, baby. Doctor hooked me up. Got some good drugs, and as you can tell, it's definitely made a pretty good difference. So thank you so much for tuning in tonight. Don't forget to subscribe, hit that like button. I'll see you guys on the next video, and hopefully I'll see you tomorrow morning, every morning in the trade room. As always, my name is Joseph. Be well out there. Stay healthy. Be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.